want to start with you. Holidays are heating up, and we're seeing huge competition in the tech space. From the technical perspective, what do you think comes out as a winner this season?
Well, we've been trying to see if we can get some kind of Santa Claus move into the end of the year, and lately the market's been very choppy. So I'm trying to figure out what's showing relative strength. And recently, I've seen Facebook showing relative strength. It's above the 8 and 21-day moving average, so it's actually showing some health. I think if there's a candidate to make new highs in the year, I think it's Facebook. I also think Apple and Baba are both acting very well. You know, they're a little off their highs today, but I think you watch those two charts and those two stocks, they have downtrends that are defined. Apple above 115 could make a move for highs, and Baba over 108. I think some momentum comes back. But right now, market's a little testy here.
To talk about testy, Trent, I want to bring you in on this. Now, we saw retail sales come out this morning. That blew expectations away. Dow up at 225 points. Now we are pulling back. The Dow is actually only up 86 points. You know, as they say in South Florida, ¿Qué pasa? What is going on here? Because you see it from a bigger spectrum.
You know, I still like the market up between now and the end of the year. And a big part of today's numbers, if you take a look at them as they just are, you know, in a vacuum, yes, they beat expectations. Were they crazy out of bounds? No. But I think the reason you saw the market react the way that it did is that these concepts we've been talking about over the last couple of weeks, namely jobs and the price of oil, we feel like it's going to increase spending, right? We feel like it's going to help growth. But now we're starting to see some of the low prices of oil manifest themselves in the data. And I think that's why you saw the spike this morning. I believe we're going to continue to see the discretionary income levels being increased due to the lack of money people are paying at the pump continue to come out in the numbers. I think that's going to be enough to keep some upside momentum. We are off the highs, I know, but I think you'd be on the smart side to be long as we enter in these last couple weeks of the year.
All right, well, let's go to Elliott, because oil did break below $60 a barrel. We closed below 60, didn't we?
You know what? I didn't actually see the close because I was right here, but I believe, I mean, it was right within 10 cents of $60 one way or the other, and it's going to keep going lower. You know, I'd like to agree with the other fellow who was saying that people will take this money, you know, spend it elsewhere, maybe more Christmas presents. That I'm not sure about, but I would say that crude is still a sale, and it's really the Christmas gift for everybody out there, to be honest.
Elliott, I want to keep with you on this one question. Is this a drop in demand, or is this a global economy slowing down? What is actually going on? Or is China still sucking up a lot of oil but just not growing what they need?
Well, you know, I would say that, you know, they're not taking any more right now, but the truth is the price of oil, you know, the price to pull it out of the ground and a lot of the major places is still well below where it's trading right now. You know, you'll see American shale guys, it's below what they cost them to pull it out of the ground, but this is not cheaper than, say, you know, Middle Eastern oil. And you know, honestly, I think there's a larger force at work. You know, this big sell-off, it came right at the time when, you know, the Russians really needed crude to stay strong. And I don't think governments get involved in markets, but I mean, there is something larger at work, in my opinion. I think we keep going down.
All right, Scott, I want to come back to this discussion of maybe something larger at work with what's going on with the indexes. I mean, the S&P, the Dow, they pulled back from what was pretty spectacular highs after what we saw sell-off yesterday. Is there something that we haven't put our finger on which is causing this, and should I, as an investor, be nervous?
I think the psychology keeps changing from day to day, and every time oil breaks a new threshold, they go from oil being down as a positive to, oh my goodness, maybe some of these oil companies are going to wind up going bankrupt or their debt is going to be liquidated. So below 60, I think the market got a little scared. I think ultimately the push-pull will play itself out where down oil will be a positive for the consumer and for the economy. But psychologically, every time oil breaks a barrier, the market comes in and gets just a little bit scared, which I agree with, and it probably should.
Trent, I'm going to throw that question to you, too. I mean, is this a supply glut, or is it a global slowdown that we see this drop in oil?
I'm not seeing a lot in terms of the data that suggests there's a big lack in demand, and I think that's a very good question with respect to this narrative that healthy economies typically see higher oil prices and vice versa. I don't think the two are mutually exclusive. If the drop in oil is due to, you know, a non-demand related issue, I know the gentleman in New York touched on it. You know, if there is something bigger at play, you know, that I would fall into that same camp, that it's not a demand issue at that point in time. So until I see more that suggests that it's a demand issue that's causing oil prices to go down, I don't think that low oil and a healthy economy are necessarily mutually exclusive.
All right, we're going to have to end it there. Dow up 102 points. We're keeping an eye on that as we head towards the closing bell. Scott, Trent, and Elliott, thank you very much. Something else we are keeping our eyes on, Washington, D.C. Lawmakers are hitting the pause